I welcome you to view this presentation where I am going to discuss a very practical issue which came up before me very recently. A charitable trust, a micro trust with a very meager gross receipt of say less than 50 lakhs had excess of expenditure over income, and I had not filed a return of income for the assessment year 15-16. To the utter surprise of the trustees, it got a show cause notice for levy of penalty under section 272A, subsection 2, clause E, which means the penalty presently is 500 rupees for the delay in filing of ITR. Previously, for the assessment year 15-16, it was 100 rupees per day. There is no cap like for TDS TCS that the penalty should be limited to the amount of TDS or TCS, whereas in this case there is no maximum cap. So when looking into the facts, it came to light that the trust had excessive expenditure over income, and the trust had so many objects, but still its only object which it pursued was education. Therefore, we refer to section 11 subsection 7, which says the trust being an umbrella organization, when it has income under section 1023C or section 10 subsection 1 agricultural income, such income could be eligible for exemption. In this case, the trust has many objectives, but in spite of having so many objects, it pursued only one object of education, and that also had a negative figure, in the sense excessive expenditure over income. So we presented that the trust is not liable to file the return for the reason that it had excessive expenditure over income, and we drew the attention of the income tax authorities to section 139(4)(c), which says that a trust which is covered by section 1023C clause 3AD should also file the return, but only if the total income, without giving effect to the provisions of section 10, exceeds the maximum amount which is not chargeable to income tax. In this case, it had negative income, therefore it is not also covered by section 139(4)(c). Assuming the trust is covered by section 11 for the reason that it has obtained registration under section 12A, then also section 139(4)(a) says that only if it has income which exceeds the maximum amount which is not chargeable to income tax, it has to file the return. So friends, what inference I am drawing from this presentation is that a micro educational institution having aggregate receipt less than 5 crores, and if it has no income exceeding the basic exemption limit, it is not covered by section 139(4)(a) and also by section 139(4)(c), and in case it has excessive expenditure over income, or it has income but which is less than the maximum amount which is not chargeable to income tax, say rupees 2,50,000, in such of those cases filing of ITR is not mandatory. I hope I have made myself clear. Thank you.